Hello and welcome to Hekima Council's Makala podcast channel. My name is Amanda Masondo and I'm your host. We hope this podcast finds a way to impact, educate, and inspire your next. Hello and welcome once again. It is either a first or a last Friday, as you know it. I'm your host, Amanda Masondo, and you are at the Makala podcast. Welcome to everybody that's tuned in. My guest today is an extraordinary guest, one of my favorite. He's got over 20 years experience in the investment world, over 10 years experience investing in global and South African stocks. He is quite a guy. He calls me the queen, which I am. He is the chief investment officer of Benguela, and he's also the co-founder, Zwelakhe Mnguni. Welcome, sir.
Thank you so much, Amanda.
Excited.
You gave me too much credit to start with, but I appreciate it. You are the queen and always have been.
Thank you, sir. Thank you. Welcome. Be at home. Feel at home.
Thank you.
Are you ready? It's going to be tough.
No, I can imagine.
First things first. Let's start with your upbringing. Where were you born and raised? Who is Zwelakhe Mnguni?
Yeah. I don't want to think about it, actually. It's torture. I was born and raised in the Val in Zwelakhe, and I spent most of my youth there, and I think it was 86 during the riots. My parents took us to the Free State to avoid the riots at school. It was actually a terrible incident. So we came back from school, and it was the time of the neck lacing, and somebody had been neck laced, and I struggled to eat for 2 or 3 days. My dad said, he's going to put us on a school somewhere far away from the violence and that. So I ended up in a school near Kroonstad, and then I worked my way back to Zwelakhe again. So throughout that time, I came from a family that had nothing really. We were in a squatter camp. We didn't realize it at the time. We thought that was the normal life under apartheid. But yeah, we came from that environment and managed to get back back at home. And I spent after matric, I was actually supposed to go study at Durban Westfield. At the time, I was mad about civil engineering, and I'm glad I didn't follow that path in the end. But I didn't have money to study, and my family friend basically suggested to me that I take up a job, which was literally digging trenches to pipe water from one section of the township to the new township. And that was zone 17 to zone 20, what is now zone 20. At the time, it was a squatter camp as well. So out of that, I started saving that money. And I remember the pay was 60 Rand per cubic meter. So 1 meter wide, 1 meter breadth, and then 1 meter down, 60 Rand. And I saved up that for a number of weeks. And then took that money, went to the security academy, and I spent quite some time in the security academy. I don't remember, I think it was at the time the grades ran up to grade A, and I spent up to grade B, probably about 3 months training there. I was trained by ex-military guys, so the guys that actually were leaving the defense force after the elections were actually going to be retraining us and were very tough on us. And then I started my first job as security guard. It was 1994 still. And I worked my way through the ranks. I ended up being a site manager at one of the sites, was a big packaging company, and I'm packed from the Bell Park. And then from there, But my whole plan was that I saved to go to university, and I started saving with 50 Rand. That was my first saving. And I ran for a long time at that 50 Rand. When I got promoted to a site supervisor, I then took that money, the increase in my pay, and saved all of it. And then I got the site manager, saved all the money again. Every increase I tried to save it. And I ended up with just probably at around the 30,000 Rand mark. I actually I got an opportunity. So as a manager, site manager, I got an opportunity to go work for a chemicals business that had a role, but for a junior role, but they were paying a lot more. And of course, I gave up the office the office job as a security manager and went back to the gate, and I worked at the gate. The fantastic thing about that decision was there were rewards that the company had set, and basically said to us, there were two things that they were always worried about: theft, unauthorized entry, and alcohol in there for people who are at work. And if you could pick up any of those incidents on any given month, you'd get an extra 1,000 Rand on your pay. Anything above, let's say it was a point system. So if you do 2,000 points, you get 1,000 Rand now, and then 1,000 Rand is deferred to your year-end bonus. So the basics were good compared to where I started in the security industry. It was 893 basic salary. I ended up at 1.4 when I was a site manager. And at the junior job at this chemical company, I actually started at 3,000 Rand a month. So
doubled it.
And then add on top of the performance incentive. So I was able to rapidly save up money. I think it was probably in a period of 2 to 3 years. I had racked up about over 60,000 Rand in my bank account. And through that process, I had been able to build my grandmother a house and settle some of my tax. But yeah, and then off I went. I think it was 1998, if I'm not mistaken. Off I went to Rao. It was called Rand Afrikaans University.
It's UJ now.
I'm sorry.
Kingsway campus.
It's for those that lived a better life. So yeah, and then I studied accounting at Rao, and when I completed at the BCTA, I went to Cape Town. I actually wanted to become a chartered accountant at the time now. So through the security years, I pivoted from wanting to be a civil engineer to wanting to be a chartered accountant. But when I got to Cape Town, so I studied at UCT, and I failed at honors, and I changed to finance and did very well. And at the time, I was already employed by Allan Gray. So I started my internship, I think it was 2000, late 2000 or 2001. And yeah, I worked at Equities for 2 years through that internship. And then in beginning of 2003, I started at Allan Gray as a trainee, a graduate analyst. And yeah, it was quite a journey. So I spent that time, learned quite a lot then. So whereas at Cadence, the investment was more quantitative, at Allan Gray was a lot more involved. You blend the quantitative and the qualitative, and you kind of make sense. And that kind of resonated a lot better than with me than the other one, because I always used to say that the Cadence investment approach was dry, because it was factual, calculated, and that's it. You don't have any secondary opinion. Whereas this side, there was a bit of opinion. And I spent probably 4 years at Allan Gray, and I decided to come back to Joburg, and Cape Town being Cape Town. After a while, it tells you out. And I came back to join Stanlib as a TMT analyst and also as the co-portfolio manager of the Value Fund. And then I also managed the Global Science and Tech Fund, which I managed alone. Again, that was quite an experience. I mean, on all three fronts, I think I acquitted myself very well. And when in the post 2008, I started thinking about what does this mean now? You're portfolio manager, you've been analyst, you've done well. Many people don't know how hard I fought to separate Telkom from Vodacom. Quite big fight there. And then I was like, what now?
Yeah, what happens now?
Exactly. And the question was for me, what does our generation do for liberation? So sometimes people, I don't talk about it often, sometimes you offend people, but Benguela's background, deep in the background of Benguela, the thinking, the genesis of Benguela is, it's a generational battle to say, and I remember I said probably around 2009, I started writing investment process and I said, if I had a clean slate and I had to write an investment process, what would it look like? And I had been privileged to be sent to a number of asset managers in the US. My boss was very, very accommodative at the time. And he gave me an opportunity to go see a number of large managers in the US. And then came back and with now ideas on process, why this process works, why that process doesn't work, why do certain investment processes deliver good results, others don't. And I wrote that about 2009. And in 2010, I decided that I was going to leave to start a asset manager. But now I knew that it wasn't going to be easy. Right? The first thing is that you end up with people, you could be a portfolio manager at a large firm. The minute you step out and you're on your own, you end up being, people are like, don't trust you anymore. They don't believe in you anymore. So one of the things that I started to do and discuss it with my partner was with me at university, Carl Gevers, was that we started a disposable nappy business and we run it, and then the cash flows from that business can take care of our families, right? And then we can then take our savings and focus on building Benguela. And so it happened that we started that business, we're running. And I mean, I've never operated without a secondary business. And literally, I've always had a business on the side. So the mainstay at the time was the trucks. So I had trucks on one side, and then we had this disposable nappy business. And I spent, as we were building this business and we started, it was quite dominant in the townships in Gauteng. So all the way from Soshanguve south, all the way to south in Sebokeng, Sasolburg, in the East End as well. So we were distributing nappies, and long story that I can tell you about how I put out a tender on Alibaba. I went to China and Shenzhen, spent probably 3 weeks there, put out a tender, got the nappies designed and specs tested, and then came back, awarded the tender to somebody in China. It was a company called Megasoft to manufacture. I came back and we came to set up the warehouse here in South Africa, not far away from where we are today. So yeah, I mean that was the story. And while we were running that nappy business, what happened was we got a friend of mine came to me and said, look, my business facing some challenges. I need a portfolio manager urgently. And I said to him, only on condition that I could run the process that I've developed and tested on my own on the side. And he said, fine. And I went to join them for about 3 years. and I was the head of equities and portfolio manager there. And then after 3 years, I had a fantastic run. Like really was one of the highlights of my career, and came back to Joburg. So I was traveling between Cape Town when I was helping these guys.
Yeah.
And then I came back to Joburg and we set up Benguela. I think last payslip was August 2013. I remember it because it was what followed afterwards was quite painful. August 2013.
Yes. So would you say that that's the sort of the moments in which the entrepreneurial bug then bit you, or did it happen while you were at Allan Gray, or while you were starting the tracking business? I know that the goal was secure the cash.
Yes.
But when did the entrepreneurial bug was that implanted?
I mean, to tell you the honest truth, I was probably forced to be entrepreneurial at my young age. I was started selling at school when we got to the Free State. I used to sell. My mom used to stock up these. They were called beaches.
Yes.
Those chewing gum.
Peach.
Yeah.
Peaches.
Peach apricot. So that's where I started selling, and then I became a cameraman for a long time. That was my business, and you kind of learn to deal with a business at that level because you initially, I remember my mom screaming at me because I made some money on the beaches, the chewing gums, and then I blew it up, and I didn't have money to stock up again. And then she said, "I'm not gonna giving you a last chance." So it was quite a lesson there.
Yeah.
But I think in terms of the serious business, I mean, it was probably I was already at Allan Gray when I started realizing that there are opportunities, and certainly opportunities to try and get upward mobility in society in a country like South Africa where we were hugely disadvantaged. So, and as I said to you at the beginning, that Benguela was for me a moment where I said we need to do something. And one of the things that inspired me about that whole generational responsibility that we have was the role played by Chris Hani in the armed struggle in South Africa. I don't think it's well acknowledged. Those that read the history would know that he was among the first people who tried to cross into South Africa. There was a campaign called the Spolilo campaign, which went through the Wanki forest in Zimbabwe, and he was accompanied by the Zebra guys, Fiso Dabengwa, and many others, Moffat Khatebe. Those are the Zimbabwean guys. And one thing that touched me that Krishani said, he said, there was a fierce army in Zimbabwe that was called the Sila Scouts. And he said, we faced the Sila Scouts. He said, I think he said there were about 60 of them, and they had the platoons and they had all the big machinery. They faced them, and he said they lost a few guys. But he says, everybody knew that we might die, but we realized that we had to die to liberate South Africa. And that stuck with me for a long, long time, right? And when I was sitting like comfortable now, I forgot already that I was security guard, and I was having all this life. I could fly all over the world and comfortable. The question I asked myself is this it? Right? So what role am I playing towards the transformation of our industry? The guys that died in Zimbabwe, guys that died in Lusaka, they would have died in vain if we don't try and advance our participation as Black people in the financial services industry. And one of the things that I took exception to, having had the experience in the asset management industry, was that many South Africans, their pension funds, substantial amounts of money are invested outside South Africa. Right? And that money that was managed outside South Africa is being managed by foreign firms. Right? Number one, it means that as a country, we will always be beholden to those foreign firms. They're creating jobs in their countries. So particularly London, New York, Tokyo to a less extent. But they basically taking our funds, they're managing them from there. They're creating jobs in those countries. When they're able to do community and social responsibility, they're doing it in their countries.
With our money.
With our money, right? Thirdly, the balance of payments. They're always sucking fees out of South Africa and they're giving nothing in return. So from that point of view, the fiscus misses out because that's money that could have been taxed here in South Africa. Right? But the fees are being recognized in foreign country, but it's our money. Right? And that was the thing I took exception to say, because they say if you're trying to start a business, you have to try and solve for a problem. If you try and copy somebody else, oftentimes it doesn't go well. But if you know why, what you're trying to solve for. And Benguela was born out of the idea that we have to beneficiate local skills to manage global investments from South Africa, right? And I think there was an enormous skepticism around that because already the black managers were playing in the space where they were managing local assets, right? Yes, there was hesitance to allocate money to them. But now if you say, please, can I have global money to invest? Guys are like, you
Of
dreaming.
course not.
You're dreaming, But I think with time, our discipline, our consistency, clients have given us support. Our business currently sitting around 6 billion. Out of that 6 billion, there is R1 billion that is from global mandates, right? It's taken that long to build it.
Sure.
But we probably amongst the first black firms to actually have a global product that is licensed in Ireland. So the first time we were licensed in Mauritius, and we got a license as well in Ireland. Ireland is a lot more stringent, probably, and I'm confident that of the African-led black firms, we're definitely the first. So in the east of South Africa. And that is what Benguela was sort of all about. The goal was to say, we need to bring back the skills here. And there's nothing, we are not inferior. We've been taught that we are inferior. We can't be good. And if I go back to that reference about Chris Hani, the Sila Scouts were the most feared army in Zimbabwe. And what Chris Hani was saying is we beat platoons and there were just 60 of us. We lost a few guys. The myth that the white guys that were operating in Zimbabwe, the Sila Scouts were superior to us. We can't operate guns. That was blown, right? And I'm sitting here today saying that the myth that black people cannot manage global money is blown. And that is the story of Benguela in a nutshell. So if you look at, we've got a firm now that's 19 people. The payroll is significant, north of 20 million rands, right? And that is money that could have been spent on skills outside South Africa.
In Asia, yeah.
And the amount of knowledge and skills development that we are creating and the amount of young people that we've given, I think in the last 10 years, we've probably given more than 10 black females an opportunity to enter the industry, where the industry was actually reluctant to hire graduates. We've made great successes with graduates. And another thing is, if you look at how the mindset is shifting now to say, well, everybody can do it. And if you look at our performance numbers, we up there with the best in terms of the global product. And the point I'm making is that it's a myth that we are not good enough. You look at, and that's what I say, sometimes I cannot separate my responsibilities as a business leader from our socioeconomic situation. Right? If you look at the Americans, who were some of them, the Black Americans that were taken from Africa and enslaved in America, they're still fighting a battle to be liberated. They're not liberated. Right? And we had a unique opportunity as South Africans to be liberated, no blood, no nothing. And here we are, sometimes we tend to be a bit more short-sighted. The opportunity is huge. And we have the brains in South Africa. I absolutely believe in that, in media, in financial services, in everything.
Yeah.
We just need to believe in ourselves. And I think one thing I can say, if a security guard can become a CIO, start so many businesses, successfully manage investments, employ 19 people with extremely high qualification, many of them better qualifications than me. And that's the opportunity in South Africa. That's what's going to change our country.
Yeah.
And we need to realize we have a generational mission as Black people. We're not going to be liberated by anyone else. We need to liberate ourselves. So that is the background to entrepreneurship and how I think about.
Sure. So then let's go back to customers or consumers having to trust you with their funds. You are a Black firm, nobody's ever heard of you. Sure, you have Allan Gray and all the other places that you've worked, but the stereotype around Black people and money goes back centuries, I'm sure. What did it take? What does it take for you to convince your clients, first of all, to invest or to believe in you, essentially, to believe in you? And what does then Benguela Capital, as Benguela Global, as you walk in, what does the client get? What's on offer?
So the first thing is, what you're talking about, whether people believe in you. It was said to us when I was at Stanlib and managing the Value Fund. A client came to us and said, I think it was in PE, we were on a roadshow. Client said to us, look, you guys have done well, but we grew up knowing that Black people can't manage money. And we are surprised that you're doing so well. Yeah. And she said to us, be patient. It was me and my boss at the time. She said, be patient. Eventually people will buy into you if you're consistent. And fast forward to where we are. Of course, people didn't believe in us. I mean, our first client was actually a unionized fund. And it was literally the uneducated guys who were shop stewards who fought for us to get a mandate purely on the basis of transformation. Not because they thought we were better than other people. It's just it's time to address transformation. Right? And that mandate of 55 million is what has bred the whole Benguela, what it is today. And what clients get, because oftentimes when people deal with us as Black people, they have a lot of preconceived assumptions and stereotypes that when you're dealing with Black people, they can't be professional. When you deal with Black people, they can't be disciplined. When you deal with Black people, they can't be consistent. And I think what Benguela stands for is that consistency, is that discipline, is that transparency. So we've got some high-profile clients, individuals, high net worth individuals, who have put money with us and said, we never thought we'd see a day where Black people could do this, manage money globally. And we've done exceptionally well for them. And they say, this is what the struggle was all about. And for me, it's always such a blessing to hear people saying, look, you guys, your professionalism, your discipline, I mean, one thing that I always say is I'd rather underperform than go gamble with clients' money. And one of the reasons is that I know that the blue collar workers, people may not realize it, but if you take the share of money that's contributed by blue collar workers collectively, they don't have large numbers in absolute terms individually, but collectively, it's a substantial amount of money. Now, if I manage their money and I gamble with it, it is the highest form of betrayal and that you cannot do that. These are the cleaners on the street. They're hoping to retire one day. These are the security guards. They're hoping to retire one day. And here you are taking a joyride with their money. So what Benguela offers is that we will always be disciplined. We never want to invest clients' money without doing background work, without doing thorough due diligence. And it's only through those processes that we know that we can protect clients. We know that even when everybody says, great story, we're investing in this, we can sit back and say, this is not for our clients. If it blows up, our clients can afford to absorb the losses. And that's what Benguela stands for.
Sure. And then while we're on that, then your, investor activism then comes into play. Let's talk about Steinhoff. What happened there and what was your role? How did you guys get involved?
Yeah, look, I think Steinhoff has been long coming. I think from my days at Allan Gray, I always found Steinhoff to be a business that had difficult accounting. So the businesses communicate with us through the accounting. And I was fortunate that I studied accounting. And even then, I struggled to make sense of the announcements.
Census announcements were quite tricky.
And one of the things that they did was they tended to change their reporting. So a division that was reporting in Division A, or a subsidiary that was reporting Division A this time, let's say Furniture, suddenly it's now in whole. So you're unable to compare what happened last year to this division versus that division. And you ask a question, say, what happened? And they're like, no, we reallocated the division. So the numbers, it's not really comparable. Now, if you run a business and every time we get to hear that it's not comparable and then the whole thing gets rejected, it just creates, I'm very, very skeptical about management and numbers. I have to be convinced. I don't automatically look at management and like, oh, they sound amazing. So I'm always skeptical. And more than I think most of my colleagues. And I think what then happened was over time, I looked at the share scheme. The share scheme became more and more rich, and it rewarded one thing predominantly: earnings growth. And that earnings growth, if I say to you, go generate increases in profits, irrespective of how much capital you require to generate that extra profit, it's okay, you can do it. And that's what led to them getting into this shopping spree where they were buying companies year after year, right? Because you buy one company, you consolidate it into your numbers, your earnings growth increases. And as an executive, as the CEO, as management, you're going to get your incentives, right? And I think at one stage that scheme was around 2 billion rands, that what management stood to gain if they met all their targets, right? So that made me extremely skeptical because it told me that their motivation is not on creating value for shareholders. I mean, if we told anybody to say, grow earnings, here's 2 billion rand, who wouldn't try to get that, right? The point about it is, if you go beyond the numbers and look at what motivates management, it kind of gives you a better picture over the numbers. Because if you get in the numbers, they're growing earnings. Great story. If you go look at how are they growing the numbers, what are they doing, what motivates them to grow those numbers, you can see, okay, there's a big incentive scheme there. It's a good lifestyle, they right? And when at one stage they tried to buy Shoprite. So now we're big shareholders in Shoprite, at least in our portfolios. And there was this whole story of African champion. They're going to merge Shoprite with Steinhoff. And I said, what is the relationship? Where are the synergies that you're going to extract out of this? They're creating a national champion. So that was one of the first things. I went on a big campaign to say there is absolutely no way, and I pleaded with some of our clients who had bigger muscle, and I said to them, we have to go against this transaction, right? And I think over time they realized that they wouldn't get support, and they withdrew. And then we had quite challenging relationship now, because now you push back on a deal that was transformational. And then there was when they bought Pepco from Dr. Vise.
Yes.
Pepco's valuation by Braid was only half of what they paid. Right? So they paid 2 times. Braid had numbers in the annual report, and they valued it at almost half Pepco. Right? And Steinhoff paid double. Nobody could say no to that. Right? And what was happening? You look in the background. Again, you need to go beyond the numbers to understand people. It was at a time when the Zuma administration, people were petrified about what's going to happen, the rand country's going to fall apart, and all those. And my assessment is that Marcus Jooste could make the connection between those people who were wealthy, who wanted to externalize their wealth, and who were fearful about what was happening in the country. And what he did is, so he incorporated Christopher Vise into it, and not from a fraud point of view, but from a credentials point of view. You have Christopher Vise investing in your business. That means that
Credibility.
it gives you credibility. Now, he then goes out and chases this growth now in foreign markets. He buys, right? And what happened was, eventually, he was diluting the component of South Africa in the bigger Steinhoff group, because it became an international company, global company. But they overpaid everywhere where they went, right? So being aware of that, and I mean, we had like quite stiff letters between ourselves and Dr. Christa Vise. and the point was, we didn't share his optimism about the Steinhoff thing. So, and a lot of times when you ask questions, very evasive responses, you go to the results, and there was almost like a group of people, those that believe in him, in Marcus Joste's story, and those people actually would get airtime. Those that don't believe don't get airtime. So that was one thing. Again, if you read management behavior, you need to look at that as a red flag. Okay, you don't want anybody who has a different opinion to you. You want those that agree with you. That is a risk factor. And then over time, what happened was the numbers, the tax numbers didn't make sense. Looked at the tax numbers. We asked, how do you maintain the tax numbers so low? And then in the annual report they wrote, I think it was 2015 annual report, they wrote that they'll maintain a 15% tax rate. And when we looked at how they did it, there was a thing called a buying group, which was basically buying materials or merchandise on behalf of the group. And marking that merchandise up, and then selling it into the operating companies. But because that company was in a tax haven, it wouldn't it wouldn't pay tax on that amount. Right? So basically, if I make it simple, we order merchandise for 50 Rand, right? And the company that is buying the merchandise is situated in the Cayman Islands. And it is the one that's been funded by the group to get the 50 Rand to go buy the merchandise. Brings the merchandise, doesn't even come to Cayman Islands, but it basically then says that merchandise now, sell it to South Africa at 65 Rand. Sell it to Europe at 65 Rand, right? So there's already 15 Rand there. That is in a 15 Rand profit that is in a tax haven, right? Now, the rest of the group, they come and they trade in South Africa, they pay tax. But they pay tax on a depressed profit. So let's say they sell the product for 100 Rand now in South Africa. So they're getting, instead of making 50 Rand, declaring 50 Rand profit in South Africa, they're only declaring 35 Rand because the other 15 Rand is declared in a tax haven, right? And because of that, your tax is automatically lower because you're paying tax only on 35 Rand instead of 50 Rand, right? So when I looked at that and we had like lengthy teams looking at it, it was very, very, very uncomfortable, right? Then looking at the cash flow statement, there was always the number called ADA. You know, when you build a cash flow statement, it has to get to a point where if you take out the known non-cash items, depreciation, amortization, you know, then you must get to clean cash to say this is how much cash generated. There was always ADA that was a balancing figure there. And that kind of spooked us to say, the numbers don't make sense, the text doesn't make sense, the incentives that don't make sense, the behavior doesn't make sense. And that's really the four legs on which we looked at this and said, not for our clients. This is putting clients in. And when you ask hard questions, they become aggressive. I mean, it's always a red flag. So despite all the exchanges, I think Dr. Visa was convinced about Marcus Joste's strategies and all those things. So we know what happened. But I think one thing I have to say, my belief was that Visa was so complacent as the chairman because they all had the same kind of mindset, right? I mean, it's often said in the media that it was an old white boys club, where many of them highly qualified, but the complacency allowed them to overlook at certain things.
Because has he not always made money for you?
Yeah.
Yes. Who didn't? What's the big deal?
And I remember one of the incidents, and we also actually went toe to toe with Dr. Wiese on the tax situation in Germany. And he defended completely that the tax allegations about the tax fraud in Germany were unrealistic. They were not fair, they were not good, and whatever. And he defended it. And that's where I draw the inference that he believed in him so much, and as you say, always made money for them. And that was the story. So we walked away, and thank God we did, and thank God for our class.
Absolutely. Jeepers. So let's maybe take a step back and talk about the unfamiliar world that is stock market and the stock markets. And I think a lot of Black people, I think, struggle with understanding how that world works, which is why they're a little bit hesitant about putting their money in it. If you were to explain it to them in simple terms of what it is and why they should actually put in some of their money in there, whether it is 50 Rand or that
100 Rand.
100 Rand.
Look, I think one of and you're touching on something that also resonates with the theme of us liberating ourselves. And one of the injustices that was done to us as Black people was we were not taught much about money. Even where we are taught about money, we were taught to spend rather than to save and invest. Because the three things are different. Consume, save, and invest. Save is for the short term, invest for the long term. And numerous, there is irrefutable evidence that the stock market generates the highest returns for investors. So if you look into for the long term and for the next generation, you want to invest, you basically could put money in the stock market, but a well-diversified portfolio, and come back to breaking it down. But basically, that gives you the highest returns. This money market, in terms of the order of return generation, money market, property, and bonds often oscillate, but then you get the stock market, and then you get the private equity and all the other things that are often not accessible to the man in the street. The stock market, the reason why it's such an important and useful vehicle, investment vehicle, is that the stock market in its simplest form is you are buying into a business, and the idea is that that business would generate money. And as it generates that money, the value of the business, if it doesn't pay that money out in dividends, right, and they take that money and reinvest it, they can grow that money. And the share price on the stock market has to mirror that kind of improvement in value, right? And which is why if a business does not generate money on a sustained basis, it's unlikely to be in a situation where it will actually have a sustainable good share price, right? So the investment element is all about finding businesses that would not only grow your money, but they're also safe. And that's one thing about Benguela to say. When people look at, the thing's cheap, and I can give you an example on this transaction capital. Never owned it, right? The numbers, there are numbers that didn't make sense, right? But the point about it is when things look cheap, remember there's a whole army of people that are looking at these companies. And you think that somehow you be the one that goes and finds this amazing cheap
This
thing.
one stock, yeah.
Exactly. So you always have to ask yourself, why is it cheap? Because maybe it's cheap for a reason. But the benefit of focusing on safety is that if a business has got a lot of debt, Tongaat, Steinhoff, eventually goes bankrupt. So you want to have safety. You want to have two components in your investment. You want to have business that can grow your value, but it's also safe. So when you look at that, in many parts of the world, you are getting opportunities where the growth opportunities are huge. Investment opportunities where growth opportunities are huge for these companies. They can take money, go and reinvest it, and then they can grow and generate more value for you. So the stock market gives you a significantly higher value than if you bought a bond, because a bond or a fixed deposit account will give you 6 rand on 100 rand, for example, and that's what you'll get, right? Whereas the stock market, if the business is well run, which is why management matters, business is well run, the business is safe, the business generates value. You may make 20 rand in 100 rand. You may make 40 rand in 100 rand. And the benefit of that is that you are able to then compound your wealth a lot quicker. And that is why it's so important that there are lots of vehicles in the market today that are trying to help investors access the equity market. But they also helping the entrepreneurs in those sectors to basically feed off the money. I mean, if you look at some of the trading accounts where the kind of fees that they're charging, if you go look at what the bank would charge you to trade, that's actually an inhibitor to the transformation of the ownership of the stock market. if you go look at some of the accounts where there are global investments, 1% easily, 1.5, 2.5%, that's investors' money that goes away without, that doesn't give a return, right? Yeah. So I think it's so important that we always think about, like I said, consumption, which is today, savings tomorrow, and investment is in the next decade. Right? So we need to be conscious of that as Black people, because it's something that we were not educated about. It. There is a lot more opportunity. If you build a nice, diversified portfolio, you should be able to do well in the stock market. You just buy safe stocks. They don't have a lot of debt. They're well run. They run by honest people. They have good opportunities. I mean, take a Checkers. When do people stop eating? Right?
They won't.
Where you take a business like Woolworths, which has a niche within the retail space. Businesses like Clicks, businesses like pharmaceuticals. Those type of businesses do give you. They've got business models that are very sustainable. Where the mistakes could be is that management is aggressive here, and that's what you have to pay attention to. But if you took those companies and you bought the safe companies and for the long term, you do exceptionally well as an investor. And that is the message that needs to be given to people, especially Black people, whose future needs, are deprived because they never get to invest money. Even many of us are still in money market accounts. We don't invest. We're worried about, and the important thing is get either a professional manager, like a Benguela, or get a or get a diversified portfolio of stocks. I'd hate to say things like things because they charge more than what we charge, but anyway,
available, yeah.
They're available, right? And that gives you the opportunity to participate in that market. But the stock market, if there's one thing, the stock market is the highest historically and repeatedly. It's the highest return asset that is accessible to an average human being or average person.
Okay, without giving too many trade secrets, of course, when you think about investing for either an individual or a business, so if a small business comes to you and say, I've got X amount of money and I'd like to put some of it away, does your investment advice change depending on the client that's standing before you, or the crux of it is still, the system is still the same?
It's actually such an important question because we sometimes see that kind of thing where advice changes depending on who's being advised. It's actually almost criminal that you try and do better for certain clients and you don't want to do better for them. You have to do exactly the same thing. And we don't even think about it. The portfolios, the returns that a retail client gets at Benguela is the return that a big institutional client that has R1 billion with us, they get exactly the same returns. And it is critical that you maintain that kind of discipline because, prejudice and injustice happens sometimes in very subtle ways. And it sometimes becomes acceptable. And as Benguela, it's something that, like I say, it's something that I'm completely against. Fairness is important, and there's regulations now that have come through treating customers fairly and all those things. But I think morally, it's wrong that you treat one set of customers differently from others. So these ones you get returns that are better. These ones they get and these are the people that need the returns the most, especially if they're small investors.
So then the pandemic happens.
Yeah.
And then everybody doesn't think that tomorrow will come. We don't know if we're going to make it out of our dining rooms. What does the investment industry look like at that time? And how do you calm your clients down and tell them, we're fine, we're just going to move things around to give you better returns?
The one thing that I think we were fortunate about was we reviewed our positions and we said, we're not going to trade out of panic. When the pandemic happens, there was a lot of panic. I think the stock market dropped almost 40% in a matter of a month or two. And that panic was actually an opportunity. So when you manage investments, your greatest competition is your nerves, right? You always sitting there and you're thinking, maybe I made a mistake and I need to change. So when the pandemic happened, many people panicked, right? And I was fortunate, I sat in front of the screens in 2008 and the prices were melting in front of my eyes. And this time it was like, okay, we've seen it, just stay calm.
Seen it before,
right?
yeah.
And I think the investment world was also getting a little complacent. We had an environment where money was being availed by the central banks at low rates, and it was a time of ease. And that time basically meant that we ended up with excesses where people were gambling, and many of them knew they were gambling on the stock market. And it meant that they ended up taking money that they were not supposed to put in the stock market. Maybe it was supposed to be in the savings account. They gambled with it. And then when things fall apart, that basically created panic. And that's why we saw that sell-off.
Sure. Okay. So you said don't panic. We got it.
Don't panic. No, don't panic.
Sure. All right. If I'm a small business, I want to start a business in fund management, or just a business, do you think the barriers to entry that hindered you from your start, do you think they're still applicable, or do you think so much has changed since then?
I think they're worse. I think firstly, as a black fund manager, you always have to get through the hoops of what you bring, what innovation you bring. Right? And I think today the story of entering the market on the basis of blackness is over. You have to bring something different, which is why when we entered, the focus was to say we differentiate ourselves through global. Our focus is to get global assets and drive that transformation agenda. I think a further challenge is that something that hasn't changed, that it's very hard to get funding. We ran firstly for 4 years and 3 months without salaries, the two co-founders. And yet there were people who were getting paid handsomely around us. And that's what it takes. You have to sacrifice that. So if you're thinking, if I remember correctly, in our spreadsheets, we thought by month 18, we would be generating enough revenues to get a 20,000 Rand salary as the co-founders. Right? And remember, we walked away from large amounts. But that 20,000 Rand came 4 years and 3 months later. So capital, you're going to need capital. No bank. We went to banks. We went to DFIs. Nobody wants to fund the asset manager. And sometimes I don't blame them. When you're funding asset manager, you're funding expenses. And I always contrast it with my other type of businesses that if I bought nappies, the nappies are there. Eventually I'll sell them maybe at half price, right? If things don't work out. If I had trucks, if I sell them, I'll get some salvage value out of it. If you're in fund management, you're paying expenses, right? It's gone. So if you don't make it to the break-even point, whoever invested in you is likely to have lost their money. Right? That is a huge, huge barrier to entry. So, because firstly, it stops you from scaling up. Secondly, it stops you from taking advantage of opportunities. Let's say you need to travel frequently. If you don't have the strong balance sheet, you're not going to be able to. We were lucky in the beginning. We were quite aggressive in terms of deploying our capital. And of course, there were 2 rounds of capital call. You have to put it. But I think the challenge is firstly capital. Secondly, differentiation. Thirdly, distribution. You're not going to pick up a phone and call anybody now that you are at ABC Asset Management. It's a very, very hard nut to crack to get relationships built. And your sales cycle in asset management is probably at least 6 to 18 months, working on one client to try and get conversion. And during that time, you have to be disciplined. So there's a lot more that is required. I think we were lucky in some respects that we had capital that we could access ourselves, our families, and make sacrifices, be able to live with sacrifices. But capital is a major barrier to entry because until you make money, nobody's going to give you money. The second thing is you're probably going to have to find differentiation, and it's hard work to get to that level.
Yeah.
There are still opportunities which I'm not going to tell you about, but we're working on them as well. But that is ultimately you have to bring something different in the market.
To the table.
Yeah.
Sure. So the industry fund management that is worth 5 trillion, right? But black asset managers are only occupying 10% of that, if any. What can be done to tip the scale on that, to bring us closer? I mean, at least 1 trillion something. What needs to happen?
There are two things I think that are critical. I think number one, we need to see transformation of the asset consultants. So the asset consultants are the people who advise the boards of trustees. And if I could maybe paint a picture, you went from where the trustees were historically the employer trustees. And the employees didn't have representations on the pension funds and the provident fund. And then the unionized funds agitated for representation on the boards, and you suddenly had some black trustees, right? And what it meant was that they were sympathetic towards young black firms. Right? But here was the catch. The catch was that, firstly, their co-mates or the co-trustees were not on the same page. Like managers can manage money, you bring one, I bring one. Okay. The second thing is trustee boards are governed by principles, and the asset consultants give advice. You'd have to be a very brave trustee to go bet against the asset consultant's recommendation. If they say this manager, no, not good enough, how are you going to do a transition from that? But what we've seen gradually is that the trustees have found their voice where they say, we're not going to dictate to you as an asset consultant who is a good black manager. But for X amount of our assets, appoint a black manager. Right? And I mean, the current numbers that are being proposed in some funds is like at least 10%. There are funds that have been bold to say 30% of the money must be managed by black managers. Others have said 50% must be managed by black fund managers. So you need a coordination where the asset consultants are transformed, right? Because they may hire black professionals, but if those black professionals sitting lower down in the decision-making rankings, they are unable to influence the decisions, right? And you need key decision makers to also be transformed. And the challenge is that we haven't seen enough independent black asset consultants coming through. And even those that are out there, right, they are trying, but there is hesitance from the funds because they also black. Are you going to take advice from a black guy to buy into black fund manager, that type of thing? So you need that to be transformed, but there has to be a point where there is legislation that says the demographics of the fund management industry has reflect the actual people who are contributing. Because if you look at the kind of transformation that we are seeing amongst the big black firms, the big firms that were historically won, it's not transformation, it's enrichment. You get a few individuals, key individuals, they become shareholders in that asset management firm. They get the benefits. The transformation is not broad-based, which is why if you see we did put out an announcement a while ago where we are actually accelerating ownership for staff in our own business, right? So that we would end up with almost 50% of our shares held by the staff. And the majority, 90% of our staff is black. Right? And that's what transformation does. Because at the heart, I had a transformation agenda in my heart, and I wanted an organization that reflects that. And as ownership evolves, as we buy our other partners out, the ownership is also transitioning to more black ownership. And you compare that to where high wealth people who've already made money, they go and they partner with Amanda, and now Amanda is now transformed, and suddenly they continue with their own agenda where transformation is still not a big agenda for them. So we need it's a whole lot of legs that we need. So in summary, I think we need written commitments to transform at the funds. We also need asset consultants that have an open mind to transform managers. Right? The myth that black managers are worse than the white firms has been blown. Right? So whether in South Africa or global, it's blown. Now, what needs to happen is that there has to be a lot more confidence in those asset consultants to recommend black managers. And it's highly unlikely that it will happen en masse unless they themselves are transformed. And you need that transformation at that level, because once they transform, it becomes easier to start looking at people that these are people like me and you. If they demonstrate capabilities, I need to support them. And that's really what the challenge is about transformation in the industry.
Sure. As somebody who's dabbled in asset management and various other businesses, in the context of the current economic landscape, entrepreneurship, do you recommend?
Absolutely. It's actually our only get out of jail card as a country. If you think about, we started, there were two of us with an idea. There are 19 people today
supporting the idea.
That's supporting the idea. And those people, there is an expense of at least 20 million that goes into salaries. Those people go and support families, probably 5 people behind them each. We can lift each other out of this difficulty if we start businesses, right? So yes, as an entrepreneur, you pay a hefty price. But there are guys whose bones are left in Wanki forests in Zimbabwe, in Lusaka, and they died for something. And as an entrepreneur, you have to self-sacrifice for the greater good of society, for the greater good of your clan as black people. The Afrikaners were oppressed. 1902, they got out of, they signed the Treaty of Vereniging, and they joined forces with the English. And from there until I think 1962, when South Africa became an independent republic, there was joint management. From 1962 to 1994, the entire Afrikaner nation had been transformed. They had policies that suited their transformation. They had businesses that were supported by the state, because businesses are going to go bankrupt. Entrepreneurship is not for everyone. You need to have a system, a government that is geared towards supporting small businesses. Because if the business supports, let's say for 3 years, it's going to go bankrupt. If we had foresight, it would go bankrupt in 3 years' time. For 3 years, it supported a number of families. Right? It's not all lost. Right? So if we had a government that was supportive of that kind of funding, the funding mechanism have to be put into entrepreneurship. Entrepreneurship is going to be the only thing that can help us. Many countries, because the ideas reside in individuals. Right? The uniqueness of ideas is sometimes what takes a country forward. I'll make an example. Look at Huawei, for example. Their idea on the phones, and when they started, everybody laughed at them. Right? Look at the kind of phones they are making today. It was one individual who looked at that. Today, America sanctioned China to say they're not getting chips. They manufacture their 7 nanometer chips. And it's a game changer. It's a game. The entrepreneurs, I mean, at one stage, I watched his video when Huawei was being pulled out. They mustn't supply radio equipment. There mustn't be phones. I forgot the name of the founder, and he was so emotional about it because he put blood, sweat, and tears into this thing, and his ability to grow was clipped by geopolitics. They've rebounded, right? That's what an entrepreneurship can do. If you look at our situation, there's so many challenges. Why is all this renewable energy? Why are we importing solar panels? Why? Why is platinum leaving South Africa, the PGMs, leaving South Africa to go make auto catalysts, come back and be fitted into vehicles here in South Africa in Uitenhage, and then take those cars out? Why don't we have auto catalyst manufacturing here in South Africa? Look at the OPEC. OPEC, they've got a cartel. Why don't we have a platinum cartel between ourselves, Russia, and Zimbabwe? Because that's the majority of the supply. Those are things that we need to look at as entrepreneurs and say, where are the opportunities? The whole renewable energy thing, you could sit and cry and say, or say there's load shedding. It's a massive opportunity. Imagine if we could put together a solid team of people who are currently unemployed, and you say to them, here, let's take all your grants, put them together for 12 months, and we'll measure the number. Let's start a little business where you can actually install solar panels. Or let's find funding for you. I'd be willing to consider a business like, as poor as I am, I'm willing to look at those type of businesses where I could assist, because this is a national crisis. But it's a crisis for as long as we allowed it to be. Because the technology, the science behind solar panels was long discovered. And all we need to do is bring it back home and basically manufacture here. And we're getting into loans at government level to go and import solar panels. The money never comes to South Africa. And then the payments have to leave from South Africa to go pay that money. I believe that the opportunity is huge. South Africa is a developmental state. There are huge opportunities. We just need to open our eyes and not cry about our situation, and actually look at what the opportunity lies ahead of us. And I'm saying that as somebody who was a security guard at one stage, and people look down upon you and you are nothing. Unless if you dwell on the fact that, oh my gosh, people are not looking at me, they don't see my potential, you're gonna die as security guards, right? And the same applies with us as a country to say, as entrepreneurs, if we can look at this and say, yes, there are issues. You know how to run a business, you've made mistakes, you've learned from those mistakes, you can do it again, right? And if you don't succeed, somebody succeeds because they improve on your idea. And that's how we can move forward as a country. But the current state where we are consuming and not creating anything is a big challenge. The current situation, and if you take it even to the basics, how much land is lying fallow in South Africa? Why are we not the people who are producing food and exporting food for the rest of the world? We've got such a great weather. We can plow and produce so much. That's entrepreneurship. I'd like to talk to somebody about stuff like that. How do we make it work? These are opportunities where it's not only about money, it's also about national interest. It's also about the guys that died to liberate the country. What is our generation doing to liberate the country? The country is caught up now. It's no longer apartheid. It's poverty. It's politics. It's corruption. How do we liberate everyone else and, leave a legacy that we think could make a difference for future generations? Look at Afrikaners, what they achieved.
And they did it.
Yeah.
We can do it. Nice. Anyway, I wanted to also just give you an opportunity to maybe give advice to entrepreneurs who are looking to scale up. So I've already started my business, but I feel like I've reached a ceiling. How do I scale? How do I get to the next level of expanding this business so that whether it's in the stock market, whatever it is, what do I do?
I think the first thing is look for partnerships. You'll never have enough capital, right? But look for partnerships. There are some times where there are opportunities where you can partner with people. Right? Money isn't everything. It's an important component, but you might find people who have know-how, who could basically contribute to help you scale up. Distribution is important, right? So you may need to find partnerships where you can partner with other people who could give you access to other markets. Because presumably, if you are, let's say, a fund management or a tech company, your fixed cost base is high. But once you get set up all the infrastructure that you need to run that, so we can run 50 billion with the current team at Benguela. No change, right? And because you've got that, we now need to look at how do we partner? How do we get other opportunities? So to scale a business, you have to kind of start thinking about, do I need partnership? What do I need the most? Capital? Do I need skills? Do I need connections and relationships that other people can offer me and work and sacrifice a little bit and try and scale the business? I think you also need to look at ways of, is there a more efficient way of executing on the same thing? I mean, one thing that I'll tell you about Benguela that we're working on, which is I'm very proud of it to have spearheaded, is the story about automation, where we are driving significant automation into our processes. And I think without doubt that in the next 2 to 3 years, we should be with AI. We should be able to have the work that analysts do today, the majority of it replicated by the computers. We already at an advanced stage, which I can't talk too much about, but we've made some progress in the direction. And sometimes you can scale up that way because it would give you, through automation, you require less costs and you can reinvest the profit in a different area.
Sure. Ladies and gentlemen, that was our host, Ubab Kumete, Mnguni Ngayeye, Zwelakhe Mnguni, the co-founder of Benguela Fund Managers. Thank you, sir.
Thank you so much. Thank you.